Hello, welcome to our channel. In today's video, we're going to talk about a subject that may seem intimidating to many people: stock investment. We know that many beginners have doubts and fears about how to invest in this market, but believe us, it is possible to invest safely and profitably. That's why our topic today is how to invest in stocks for beginners. Before we start, let's give a brief explanation of what stocks are and how they work. So get ready to learn and clear all your doubts about this important subject for your financial life. Before we start, if you're not subscribed, please subscribe and turn on notifications. Let's go to the video. Part 1. Understanding the stock market before starting to invest in stocks. It's important to understand what the stock market is. The stock market is a place where company stocks are traded. When a company goes public, it issues stocks and sells them on the stock exchange. Investors can buy these stocks and become shareholders of the company. Stocks are traded on the stock exchange, which is the place where the buying and selling of these securities take place. These operations are carried out through brokerage firms, which act as intermediaries between the investor and the stock exchange. There are different types of stocks, with the most common being common or ordinary shares (ON) and preferred shares (PN). Common shares provide voting rights at shareholder meetings and therefore allow investors to have more influence on the company's decisions. On the other hand, preferred shares do not provide voting rights but offer priority in receiving dividends and in the reimbursement of capital in case of company liquidation. The value of stocks is determined by the supply and demand of the market. If many investors want to buy a stock, its price goes up. On the other hand, if many want to sell, the price drops. In addition, the company's performance and the country's economic situation can also influence the value of stocks. It's important to be aware of these factors when investing in stocks. Part 2. Getting ready to invest in stocks. Before investing in stocks, it's important to evaluate personal finances. You need to have a balanced budget and have debt under control to avoid financial problems in the future. In-term financial goals to no addition. It's important to define your short, medium, and long what type of investment is worth applying your money. Another important aspect is to evaluate your investor profile. There are 3 main profiles: conservative, moderate, and aggressive. The conservative profile prefers low-risk investment with guaranteed returns, while the aggressive profile is willing to take more risks in search of higher returns. It's important to choose investments that match your investor profile. In addition, it's necessary to choose a reliable brokerage firm and open an account. The brokerage firm is the intermediary between the investor and the stock exchange, allowing the purchase and sale of stocks. It's important to choose a brokerage firm with a good reputation and that offers an easy-to-use trading platform. After opening the account, it's necessary to transfer money to the brokerage firm's account to start investing. Part 3. Stock analysis. Stock analysis is an important step when investing in the market. There are 2 main approaches to analyze stocks: fundamental analysis and technical analysis. Fundamental analysis considers a company's financial and operational data, such as its balance sheet and financial statements. Technical analysis uses charts to analyze the behavior of stock prices in the market. To perform fundamental analysis, it is necessary to know some important financial indicators such as net income, equity, net margin, and dividend yield. These indicators help assess the company's financial health and its ability to generate profits and distribute dividends to shareholders. Another important aspect is to know how to interpret the company's financial reports, which are periodically released and provide important information about the company's performance, financial results, and future prospects. It's also important to monitor the overall market performance to understand trends and possible movements in the stock market. There are several indicators that help monitor the market performance, such as Ibovespa in Brazil and S&P 500 in the United States. It is important to be aware of these indicators to make informed decisions when investing in stocks. Part 4. Investing in stocks. After understanding the stock market, evaluating your personal finances, choosing a brokerage firm, and analyzing stocks, it's time to invest. To do so, you need to know how to buy and sell stocks through the brokerage. This can be done through the trading platform offered by the broker, where you can choose the desired stock, price, and volume. There are different types of orders for buying and selling stocks, such as market orders, which are executed immediately at the best available price at the time, and limit orders, which allow you to choose a specific price for buying or selling the stock. When building a stock portfolio, it's important to diversify your investments by buying stocks from different sectors and companies. This helps to minimize risks and increase the chance of getting good long-term returns. Finally, it's important to have strategies to maximize profits and minimize risk when investing in stocks. Some strategies include long-term investment, regular analysis of stocks, and the use of stop loss, which is an automatic sell order that is triggered when the stock reaches a certain pre-established price, avoiding further losses. It's important to keep in mind that investing in stocks involves risk and that you need to be prepared to deal with them. Part 5. Precautions when investing in stocks. Investing in stocks can bring great profit opportunities, but also involves risks. It's important to be aware of these risks to minimize them and avoid unnecessary losses. One of the main risks is the volatility of the stock market, which can be influenced by various factors such as economic crises, political changes, and global instabilities. To deal with volatility, it is important to have a well-defined investment strategy, diversify your investment portfolio, and stay alert to the market to make informed decisions. Another risk is the possibility of capital loss. To minimize this risk, it is important to invest only the amount that can be lost without affecting personal finances. Have a diversified investment portfolio and choose companies with a good track record of financial performance. In case of losses, it is important to remain calm and evaluate the strategies used. It is possible to take measures to reduce losses, such as selling stocks at a loss or waiting for a possible long-term recovery. Finally, it is important to remember that investing in stocks requires study, analysis, and patience. It is not a quick and easy way to get rich, but rather a long-term investment that can bring good returns if done responsibly and cautiously. Throughout this video, we have explored the main concepts on how to invest in stocks for beginners. We started by understanding the stock market, preparing to invest, analyzing stocks, investing in stocks, and finally learning how to manage risks. It is important to remember that investing in stocks can be a great way to grow your money, but also involves risk and requires a lot of study and analysis. However, with patience and dedication, it is possible to achieve good returns in the long term. We encourage you to start investing in stocks today. Remember to evaluate your personal finances, define your financial goals, and choose a reliable brokerage firm. And don't forget to continue learning and keeping up with the market to make informed decisions. If you would like me to make a video teaching you how to open an account with a brokerage firm and invest in practice, please comment below. Thank you for watching the video, and I hope I have helped clarify your doubts about how to invest in stocks. See you next time!